when you look at the base rate, all of us have to recalibrate our base rate at least once a quarter. So clearly, the reduction that we did, which in that sense, was prior to the last RBI policy rate cut, was based on the calculation that we did for the September quarter. So sometime during this quarter, we would naturally need to recalibrate our base rate once again. And depending on what the deposit rates are, which feed into the base rate calculation, clearly, we will come out with whatever the base rate is. Now, that's obviously something which we need to do between now and the end of the quarter. I don't want to preempt what might be the base rate or what will be the deposit rates at the time that we recalibrate that, but that is inevitable. To the extent that the deposit rates are on a downward trajectory, it would be reasonable to expect that there would be some reduction in base rates. That's the way the calculations work. The fact that we have an asset book which is well balanced between retail and wholesale and therefore gives us a good mix of yields, we believe that despite the repricing through of deposits and base rates, we should be able to maintain our NIMs in a range of 4.1 to 4.4. Now, I know this is something which we have done across interest rate cycles, across changes in deposit and lending rates, across different policy environments. But within that, we don't have a guidance on a quarterly basis or on an annual basis of movements in both directions. We are not, as a bank, in a strategy of maximizing growth or maximizing margins. We run our business in a manner where we balance our growth, our margins, and our asset quality on a sustained basis. And I think we still remain, clearly committed to that.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.